live. Good morning, Melonheads. Today is March 17th, Friday. It's 9:30 a.m. Opening bell go ding, and let's see what wonderful news the world has for us today. The controlled demolition of every small bank in America is underway, folks. That's what we're seeing. And I watched this video of Janet Yellen being questioned by a senator from Oklahoma yesterday. I'm going to be doing a reaction video to that a little later today, by the way. And everything fell into place when I watched this. What we are watching is the big bank takeover of the entire economy. And somebody might be like, Jack, you're being funny. Jack, you're being hyperbolic. Yeah, sure. Go ahead. Throw that at me. I get it all the time or whatever. What has happened right now since the collapse of Silicon Valley Bank is the FDIC, the Federal Reserve, and the Department of the Treasury got together and they created free insurance for big banks. It's free. And they are denying that free insurance to small banks who are not systemically risky, in their opinion. They have not been deemed worthy of the protections of our benevolent government overlords. So what's going on right now is anybody who's got their money in a small bank right now can get free government insurance, unlimited, if they move their bank over to JP Morgan or over to Bank of America or over to Citibank. Which, by the way, those big banks have all of the same vulnerabilities that Silicon Valley Bank had, with the exception of the unique customer base with the big tech companies over at Silicon Valley. But they have the same problem, billions and billions of piled up unrealized losses in bonds. So if you're a customer, if you've got $1 million, you're over the FDIC limit in your small regional account, why would you leave your money there when Janet Yellen just said on national TV, you can get free insurance if you move over there? Nobody turns down free insurance. So the government is not fighting this run on small regional banks right now. The government is the run on small regional banks right now. The government has made this happen. They're adding to it now. Maybe the government didn't trigger it or they didn't start it, right? But once Silicon Valley went down, once it started, the government has seized the opportunity. The big banks have seized the opportunity. This is a takeover of everything. It started back in 2008 with the consolidation following the GFC, but it is really reaching speedy proportions right now. Yesterday, they bailed out, or they rescued First Republic Bank. I did a video on that one last night. They're trying to slow it down because it's happening too fast. They're worried they might get caught up in it. But understand, folks, the government, the FDIC, and the big banks, they are now adding to this crisis. They want this crisis because their power and their influence is growing. And the punchline to this joke, the really funny thing, is in order to cover the expense of backstopping 100% of the deposits over at Silicon Valley Bank and Signature Bank, in order to cover that, they're raising the FDIC fees charged to all the other banks. So if you're a small regional bank right now, not only has the government just created an incentive for your customers to leave you, but they're handing you the bill for it. Your fees are going up. They're making it impossible for small banks to do business. That's what we're watching right now, folks. And that's why this collapse of small banks will not stop until they change this story, until they change this policy. Maybe it doesn't fall like dominoes, collapse after collapse after collapse. Maybe they'll try to throttle it. But there is a drain on small banks right now, and it's going to continue as long as you can get free insurance by moving your money over there. That's what fell into place yesterday, and I'm going to do this reaction video to what Janet Yellen said before Congress yesterday. I got to warn you, folks, it may be my angriest video yet. It's a pretty bold statement. I'm generally pretty easygoing, but I'm known to rant a little bit. All right, let's shrink my big melon of a head and see what's going on in markets this morning. We've got the S&P is down 12 points at the opener, about 0.3%, just under 4,000 at 39.48. We've got the Dow is falling pretty hard this morning. Big red candle down 185 points or 0.58% at 32,060. And the NASDAQ, which had a just absolutely obscene day yesterday, obscenely absurd day in the NASDAQ yesterday, down only 13 points or 0.12%. And by the way, there's a lot of people who are on FinTwit right now who are getting semantic and they're arguing definitions about, oh, they're using the discount window, or it's just a loan, or it's not inflationary, or no, this means that. And they're trying to argue that what the Fed has done this week, what the FDIC has done this week, was not going to add to inflation. Well, go ahead and look at this chart of the NASDAQ and tell me they haven't added to inflation. Look right here, down here at this bottom. This was Monday morning. All right, this is what happened. As soon as markets open, here, let's zoom in. Everything that has happened since the announcement of the bailout. And look at what the NASDAQ has done, all right? And again, every time I talk about the NASDAQ, I'm thinking like Peloton and DoorDash, like all these companies that barely make any money. They burn through cash. They're silly business models. And look at what these stocks have done since the announcement from the FDIC. Go ahead and tell me that's not inflationary. The NASDAQ started the week at 10,977. Now it's at 11,700. All right, the NASDAQ rallied almost 300 points yesterday. Try to argue that wasn't inflationary, whatever they did, because the NASDAQ doesn't believe you. If you think what the FDIC and the Fed and the Treasury have done this week was not going to add to inflation, try telling that to the freaking NASDAQ, folks. And if the NASDAQ won't listen to you, maybe you'll have more luck with Bitcoin. Look at what Bitcoin has done right here. Here's Friday afternoon. Here's the bank collapse when it started, or really Thursday afternoon. Here's Sunday into Monday. I'm sorry, that's Saturday. And then here's Sunday when they announced the rescue. Look at how Bitcoin has gone straight up since this announcement. Go ahead, try telling Bitcoin this is not inflationary. This is so inflationary what they have done. Look at over at the DXY. 104.16 this morning, down about 26 basis points or 0.25%. The dollar is back in that 103, 105 range. And then looking over to bonds, we have got, looks like a little bit of a flight to safety in bonds going on. People around the country, I'm hearing a lot of people saying, my guy told me to put my money into a mutual fund. So I'm sitting in cash in mutual funds. Well, what are mutual funds? Not mutual funds, I'm sorry, money market funds. My guy told me put the money into a money market fund. Well, what do money markets usually do with their money? They usually buy treasuries. So everybody in the world is going to cash right now, and yields are dropping. The 10-year treasury is at 3.477, down 10 basis points this morning, or 2.95%. The big mover is the 5-year today, down 13.2 basis points, or 3.5%, yielding 3.6. So looks a little bit like a flight to safety in bonds. Let's see. The commodities agree. Check out gold right now. Up $30, 1.6% this morning at 1953. Are we going to get a 2,000 handle on gold soon? I think we should get a 3,000 handle on gold soon. I'm not saying that will happen. I'm saying that should happen. Remember, there are some very powerful forces who are incentivized to suppress the price of gold and silver. And speaking of my favorite of the shiny, silver at 22.11 this morning, up 42 cents, nearly 2%. Silver having a great day. Crude oil, meanwhile, WTI crude down another 69 cents or 1% at 67.66. And natural gas at 241, down another dime this morning or 3.9. Take a look at the oil chart and talk about a divergence in the economy. Look at what oil has done this week. I mean, just broke out of this chart, heading lower, down at 67.58 right now. Now, a lot of people are saying, oh, President Biden is going to refill the Strategic Petroleum Reserve. He's going to take advantage of the cheap oil. It's going to be such a great deal for the taxpayers. Not without a debt ceiling raise. He's not going to do that. So maybe we get the SPR refilled at some point, and that would be great if they refilled the SPR at a cheaper level. But the government doesn't have any money right now, and they can't borrow anymore. So where's that money going to come from? So just thought that was interesting. Also, guys, look, we've got Bitcoin is going up big time. I mean, what Bitcoin is at 26,600 right now. Good God, Bitcoin has rallied $7,000 or $8,000 since this crisis started. We've got gold rallying. We've got silver rallying. The dollar alternatives are rallying. Why is that happening? Think about it. Why would gold, silver, and Bitcoin be marching up? Because people are unbanking themselves right now. If you have your money in a bank, you have a choice right now. You can move your money over to the big banks where the free insurance is, and thus everybody's going there. Of course, the big banks are all controlled by globalist World Economic Forum, ESG mandating slush over there. You can send your money over to them, or you can not have money, because if you leave your money in a small rural bank, who knows what's going to happen. Or you can not play their game. You can unbank yourself. You can get out of their system. You can own gold, silver, or Bitcoin, or food or land or what other reason. People are unbanking themselves right now, folks. They don't want to be trapped at JP Morgan. They don't want to be trapped at Goldman Sachs or Citigroup. Other news this morning, we've got SVB Financial, Silicon Valley Bank, finally filed for Chapter 11. That's more of a technicality. We all saw this one coming, but it's now official. They have filed for bankruptcy. And right now, this is another big story in Bloomberg this morning. Banks borrow $164.8 billion from the Fed in the rush to backstop liquidity. Discount window borrowing surged to a record $152.85 billion, and the new facility usage totaled $11.9 billion in the first few days. But I just want to give you this data right here. Data published by the Fed showed $152.85 billion in borrowing from the discount window, the traditional liquidity backstop for banks, in the week ended March 15th, a record high, up from $4.58 billion the previous week. So a minor increase. We went from $4 billion to $152. The prior all-time high was in the global financial crisis in 2008, $111 billion. So the banks tapped, here's the chart right here, the Fed's discount window borrowing. The banks tapped more liquidity last week than they did at the height of the global financial crisis. I hope that puts it in perspective for you folks. And the thing about QE, and someone's going to jump down my throat for calling this QE. It's QE, so sue me. The thing about QE, the thing about pumping liquidity into the system, the thing about money printing, the more you do it, the more you must do it. It gets more frequent, and the interventions have to get more severe, and they have to get bigger. This is just the first week of this crisis. If this crisis continues, the numbers will continue to get bigger, folks. So, not good. Oh, meanwhile, Credit Suisse, they're back in the news. I mean, it's been almost 24 hours since we talked about Credit Suisse. Credit Suisse bonds sink further into distress. The Swiss lenders offered to buy back 3 billion Swiss francs of their debt, failed to steady prices. So the Credit Suisse got a bailout from the Swiss National Bank, or a not bailout, whatever you want to call it, a liquidity injection, a backstop, a bank term funding program, whatever you want to call it. Credit Suisse got all this money from the National Bank. What did they do? They started buying back their bonds, 3 billion francs of it, about $3.2 billion. They're trying to steady the panic in their bonds because credit default swaps, the cost to insure those bonds has gone through the roof these last few days, and rightly so. These bonds are trading at 66 cents on the dollar right now. That's like what Evergrande bonds were trading at the height of the Chinese housing collapse. All right, so what are the Swiss doing? What's Credit Suisse doing? They're taking the money from the government and they're buying up those bonds to try to raise the prices to try to calm people down and get them to stop dumping them. That's nice of them, right? They get all this money, printed money on the backs of the taxpayers. What do? They prop up the value of their own debt. Looking over at some of these stocks, what they're doing this morning, we've got Credit Suisse is down another 6.4% right now, just over $2. First Republic, who received that very generous, not a bailout rescue plan yesterday, well, they're down 20% right now. They were trading lower than that last night. Still up versus yesterday where they started before the announcement, but it looks like right now the panic in regional banks is not yet over. Looking at some of the other vulnerable names, we have got Western Alliance Bancorp. They're down 8% this morning. Pacific Western or PacWest Bancorp, they're down 9.6%. Now let's take a look at some of the bigger ones. JPM right now, JP Morgan Chase, they are down 2.5%. And Boeing Company, no, not the Boeing Company. We don't need to go with Boeing. All right. So that's going on in banks. A couple other things, folks. U.S. Philly Fed Manufacturing Index came out yesterday, and it was a doozy, negative 23.2. Anything below zero is contraction in the manufacturing space. And I mention this because we have got asset bubbles being inflated because of this bank crisis. We've got oil prices are crashing. We've got manufacturing and slowing. This is starting to look a little bit like April of 2020 here, where the traditional economy is slowing down, but because of this artillery barrage of liquidity, asset prices in tech companies are rallying like crazy. This looks a little bit like the opening days of the pandemic. And if you recall history, during the opening days of the pandemic, the ensuing 2 years, we had a monster rally in stocks followed by soul-crushing inflation. And at least right now, and things change very quickly, folks, emphasize that, they're changing very quickly. But at this moment, it's starting to look a lot like April of 2020. A couple other things we got this morning. The Federal Reserve released their year-over-year manufacturing production numbers. Manufacturing in the U.S. decreased by 1% in February versus the same period a year ago. So again, manufacturing is slowing. And looking over at the Federal Reserve, this is the CME Group's Fed Watch tool, the likelihood of the next rate hike. We're looking at a 25.5% chance of no rate hike, and the market right now is pricing in a 74.5% chance of 25 basis points. So 50 bips is still out of here. Market right now seems convinced they're going to do the 25 basis point hike. But I have to ask, what's the point of raising interest rates if you're dumping trillions in liquidity into the market with the other hand? It's still net easing of monetary conditions. So honestly, rate hikes right now is a publicity stunt when the Fed is bazooking liquidity into the economy. All right, let's see. We got a couple of you wonderful melon heads in the super chats this morning. Let's see what you guys got to say. Got to find you all. Hold on. Here we have got Mr. Dan Hedin. Thank you, Dan. He says they need to keep the zombie companies propped up. Absolutely right, Dan. I mean, that's what these are. These are zombie companies. These are companies that don't have a lot of cash flow, if any. A lot of them are pre-revenue, and they're just burning through their venture capital cash, and the venture capital cash is now dried up, and so they're looking to the Fed to protect themselves. And well, if these zombie companies start going bad, then they stop making their payrolls and they lay their people off, and then people start selling their houses, and then we've got a housing bubble to worry about. That's still out there, Dan. We've still got people not paying their car loans. We've still got people putting the price of inflation on the credit card. We've still got companies walking away from commercial mortgages, CMBS defaults, and of course, we've got a good old-fashioned housing bubble on our hands. Shout out to Michael Gayed over at the Lead Lag Report, who's been saying this for a while. This banking crisis is not the Black Swan credit event. That's still in the future, folks. This is not the big debt unraveling. We still have that on the horizon. So I got that going for me, which is nice. Thank you very much, Dan Hedin, sir, for the super chat, the support of the channel, and for the support of the channel on Patreon. Mr. Hedin is one of our Patreon melon heads, one of our magnanimous melon heads. Link down below should you feel so inclined. Thank you guys for everything you do for me over on the Patreon. On the Patreon, everything you guys do for the channel. And Mike Bender from Robin RC Models. Thank you, sir. He says that Alaska oil drilling pivot is telling me how broke the system is. On the bailout day, they allowed a tap Alaska. Greta got some Conoco options too. Yeah, I'm sure Greta's doing a lot of trading right now. I bet you Greta's handlers, the people who are pulling the strings on that little puppet, I'm sure they got themselves some options. I honestly, I hadn't heard about the Alaska drilling pivot. My focus has been entirely on banks, but it doesn't surprise me that they might slip something in there, something that might upset their base, that they would bury it in the headlines of everything else that's going on. So I'm not too surprised to see that. That is kind of like Friday news dumpish to see that. But look, we need to develop more energy in this country. So even though prices are down now, you still need to do that. You got to be poking holes in the ground because eventually the wells that you've already got, they start to dry up. And we are still dependent on fossil fuels, folks. So thank you very much, Mike Bender. I appreciate the super chat and the support of the channel, sir. Steve Woitis is here. He says Fed bank consolidation. Deposits north of 250K are now insured only at the big banks, Steve. That's the thing. Janet Yellen said yesterday that the deposits above 250,000 at the little banks will not be protected. So the message Janet Yellen said is, rich people, get your money out of little banks and get the heck over to JPM. That's what Janet Yellen said yesterday. And man, I've got plenty to say about that later today. The wealthy won't spread their deposits out over multiple bank accounts, reducing bank competition. No, they won't, Steve. You're exactly right. The wealthy are going to go where the government is offering free insurance at the expense of the little guys at the rural banks. So that is why the government is now encouraging this run on regional banks. They'll tell you they're fighting it, but they're actually incentivizing it. Again, you cannot trust these people. There is something seriously nefarious going on in banks right now, folks. And Paw the Beagle. What's going on, Paw? That's a new name in the super chat. He says, waking up to financial economic systems, trying to learn. Outstanding. Congratulations for trying to improve yourself and educate yourself. Going with my mother today to meet with her credit union financial advisor. What is a good place for money to be in long-term commodities? I can't tell you what to do with your money. You need a permission slip from the government to tell people what to do with their money. Unfortunately, it's just the legal ways. That's why YouTubers are always like, oh, this isn't financial advice, I'm not a financial advisor, all that stuff, right? All that CYMIA stuff. We have to do that because you need a permission slip from the government to tell people what to do. And the government will only give you that permission slip if you tell people to do what the government wants them to do. So I can't tell you that. I can tell you I spread out my money. I own Bitcoin, I own gold, I own silver. I trade around in options right now. I'm sitting largely in cash right now because I am... let's just say I'm not very heavy stocks, although I see stocks melting up at the moment. If that continues, there's going to be a monster run in stocks. Hearing a lot of people are sitting in money market funds right now, which is basically U.S. Treasuries because that's safe. Uh, Ultimately, I can't tell you what to do with your money, although I can tell you I have been for the last several years very slowly unbanking myself, protecting myself from just such a scenario. So I think that's almost you almost have to do that at that point. But again, I'm not allowed to tell you, Paw the Beagle. So congratulations on seeing something that's going on, and it's okay that you don't understand what's going on. A lot of times, the financial system and the establishment, financial press, they intentionally obfuscate. They use big words. They try to make it sound convincing. They throw a lot of acronyms and a lot of fancy terms around to make themselves sound smarter than they really are. They're not that smart. All right. And most people just say, well, I don't know what that means. I give up, whatever. Just do what my guy tells me. So, congratulations for trying to inform yourself. The information is out there. You do have to dig for it. And I'm glad that that brought you to this channel. So, thank you very much, Paw the Beagle, and good luck at your credit union. Alan Van Cleave, what's going on, brother? He says, I am pissed and I'm old enough to say this is my fourth or fifth bailout I will finance. Wow. Is this my fourth or fifth? This is my third bailout that I'm financing. So I guess I'm getting a little old myself. Fourth or fifth, my hat's off to you guys. And yeah, that's a great point, Alan, and everybody. You need to know that you are paying for this. Even if you think, well, joke's on them, I'm broke, I don't have any money to steal. They can still steal your future wages through inflation. So even if you're broke, even if you don't have any money, folks, you're still paying for this because your future cost of living is going to rise, and that means your future wages are being taxed in order to finance this bank bailout. So Alan is exactly right. And Alan, congratulations on your fifth bailout that you're financing. I believe 2 more bailouts, and you get a free commemorative mouse pad from the Federal Reserve. Anyways, moving on, we've got the inflation situation. Says, any thoughts on PM premiums rising in spot prices if spot prices drop? We do tend to see that, the inflation situation. Look, premiums is just the supply-demand dynamics for the physical metal. So when spot prices drop, a lot of stackers go out and they buy more silver, and so they drive up the premiums by adding to demand for physical, and thus the net movement of the price paid for the physical metal isn't really that much because the expanding premiums offset the decline in the spot prices. And that's why you never want to FOMO into gold or silver. That's why I always just take little nibbles, little buys on a regular basis, and I spread it out along so I don't participate in these FOMO rallies when the premiums just blow out and I end up paying the excessive prices. So I just take little nibbles on a regular basis. I'm constantly unbanking myself just a little bit. So try not to participate in the panic buying or panic selling for that matter. I don't think it's necessarily nefarious. A lot of people say the bullion dealers are crooks and that they just jack up the premiums. It's not really that they're crooks. It's just supply and demand. If the demand for physical rises, the supply stays the same, the premiums are going to blow out. And that's what happens. The price is going to rise. Thank you very much. Inflation situation, sir, for the super chat, the support of the channel. Am I caught up yet? I am. And my phone is buzzing here. Is this Mish trying to get me? No, it is not. All right, guys. So long story short, the bank run right now, understand the government is not fighting the bank run. The government now is the bank run. The government is incentivizing the run on the smaller regional banks by offering free insurance to the big banks, paid for by fees to the little banks. So even if they're able to stop the domino collapse one by one, they're only slowing it down. There is now a drain on deposits from little banks into the big banks. This is a takeover of the entire economy by those 13 largest banks in the country, all the systemically important banks. Everybody else now is going to slowly be squeezed out of business. We'll see how fast it happens. They'll try to do it slower, but I think they're going to have a hard time. Once you get the dominoes of a bank run falling, it's really hard to stop it. So they're playing with fire over there. All right, guys, thank you very much for the super chats, for the support of the channel. Thank you to my Patreon supporters for everything you guys do for the channel. Link down below should you feel so inclined. Watch out for that Janet Yellen reaction video coming out in just a few hours. And I'll see you guys this afternoon at 3:15 p.m. for my weekly wrap-up live stream. That's usually a much longer one. We could talk for a little bit longer. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.